Hello, everyone, and welcome to our podcast today. Today, I am super excited to introduce you to WenFang Bruchett, and she is the owner of Bliss Finance. And I have learned so much from you, WenFang, so I'm so excited to share some of the knowledge that you have with our audience and, just connect you with some people and um, let's learn more about what you do and what makes you tick. So, the first question I wanted to ask you is, I know that you were in banking because we both share that as a background. I wanted you to tell us just a little bit more about yourself, even prior to banking, or what do you like to do with your free time, all of those good things.
Well, first of all, Renee, thank you for having me on board. I'm really excited to share the audience. Well, what is interesting with my background is I was actually made in Taiwan. So I'm actually an immigrant to the US. So when I immigrated to the US, my parents actually owned a restaurant. And make the long story short, as an immigrant, they had no idea about finance. They had no idea about how to raise capital to run their business. So that's the reason why I found out that dad needed a capital for running the restaurant, and every single bank had turned him down. So he had to sell a very precious land for less than $4,000. So that was a really sad story. And that's the reason why I vowed to really learn everything about finance. That's why I got a degree in finance with Texas A&M University. Yay, go Aggies. So from there on, I literally spent 25 years in the banking industry, just really understanding every aspect of banking, lending, mortgage, consumer, investment. So that's pretty much what I have done. And what I loved about the freedom where I am now is being able just to relax. Because I've learned one thing about life, and that's why my company is called Bliss Finance. You've got to have a balanced life to have a happy living, and that starts with the right finance. So that's what I like to do. I like to work hard. I like to have a lot of creativity in my life, including business. But on the other side, I just love to chill, and that's the basis of my life, balanced.
Yeah, no, that's great. I love that you said that because, in order to be healthy, I feel like it just, you can work all the time. And I experience that as well because I have my 9 to 5 job. I have a, real estate business that I'm building. I have an Airbnb. I have, all these things that are happening all at once, and it can get very stressful and very demanding. So, I totally get that. So you were in the banking industry for 25 years. How in the world did you decide, like, how did that happen where one day you just decided, hey, this is it, I'm done? Or how did it,
Well, it's
break that
almost
down?
like, sometimes you're something is talking to you in your heart. You just know that you pretty much have done everything. I just felt like I was a little bird like in a cage. I want to fly, but I couldn't because in the financial services industry, it's a very regulated. There's certain things that we can't say unless it's compliance oriented. So when I coach my client or share with them certain things, I feel like I've been constrained by what I'm able to share. And that's the reason why I finally decided, you know what, if I really want to continue on with my journey in life, especially helping people to improve their finances, I had to be on my own. And that's where it led me to say, you know what, it is time. And I never looked back. And I was just so happy. It was just one of my
Mhm.
happiest moments I
Yeah,
never.
I'm sure. So how long has it been since you left the banking industry?
2017.
Oh,
So
wow. Okay, so it's been many years. I didn't realize it had been so many years.
yes, it has been.
Okay. Awesome. Well, so I wanted to ask you, what is the main focus of Bliss Finance? And, obviously it's a very catchy name. You've told us a little bit about your family history. How did Bliss Finance, how was it born?
It was formed out of the aspiration of sharing the truth about finance. Now, there's a lot of misconception out there about how money is need to be leveraged, how credit card work, how to build credit, how to get financing. So I thought about compiling all my experiences and really packaged to the point. Is very easy digestible. So that's what I did. Is the focus, the initial focus was to provide financial educations for consumer and entrepreneurs. And that's exactly where the foundation comes in. And when clients start asking for different things, so I start building more of the platform to service those needs.
Okay, great. And how do you find your clients, or what person makes a great client for you?
Well, first of all, I pretty much do a lot of things on virtual nowadays. Prior to COVID, I was presenting presentations in person. So the business has just shifted. Everything is online nowadays. So number one is word of mouth. Number two is I actually have a book. It's called The Cash Formula. C stands for credit, A stands for asset, S stands for savings, and H stands for health. So the cash formula. So what, I've got a lot of referrals from the book. Once people purchase on Amazon, they realize, wait a minute, they need to be more than just reading the book. That's how they reach out to me.
Oh, that's great. And you just started a podcast and YouTube channel. So I know that you'll be sharing some really good nuggets on those two channels, and can hopefully give us a little bit more insight into the book, because I think that would be really helpful.
Yes. Well, first of all, I'm just so happy that you actually were my guest and where you shared your expertise on the commercial side of it. Yes. And the book, excuse me for a second here. Let me just go ahead and pack that. So I wasn't, there we go. Here's the book. Whoops, that's the back page of it. And again, it's everything about
Formula. Oh,
what
it's great.
it is. Thank you so much. It's a very
Okay.
thin read. And the reason it's very thin is because to me, my feeling is once you get the formula done, there's no fluffing. Follow the formula. And I think one of the misconceptions that people about credit is they don't realize how to go about building credit, because I think credit is one of the fundamental. I always say cash is king, credit is queen, because you got to have both of them work side by side. So that's where credit, assets, you got to know how to leverage asset to get through the wealthy part of life. You have to know how to save, because without saving, you can't take the asset to the next level. And then H is health. So you've got to have all of that balanced out. And that's where the cash formula, and it's available on Amazon.
Okay, great. Well, we'll definitely get that link and information from you. I can put it in the description of this video once I post it as well. So speaking of assets, I know that you and I have talked a little bit, and one of the things that you enjoy doing is lending people money. And instead of working for a bank, you are the bank, which is really exciting. And so I'm wondering, how does somebody who is just getting started, that they want to start lending money, how do they get the funds to lend, if they don't have extra cash laying around?
That is such a great question, Renee. I think one of the things is never use your own money. So that is one thing I always want to make sure. You've got to be able to leverage other people's money and leverage that out. Think about from the banking system. They don't lend money out of their own vault. The vault that is consistent of money is actually came from the depositors. They're the one that is actually giving money to the bank. So the bank leveraged that. So that's the same concept that I have for my business, lending business, is that I have a line of credit and I leverage that on the credit to lend out. And where my spread is between the cost of fund versus what I charge, and it's a very healthy spread. So for anyone that is interested in starting out lending, that is first foremost thing that I want someone to really look at the asset and say, where can I leverage my asset and create a line of credit and use that fund to lend out? Now, this is not for credit card. Please, I want to make sure that it's very clear for the audience, say, because with a credit card, you've got to know how to play the credit card game. Otherwise, you're going to get yourself in deeper trouble if you actually leverage money out of credit card line of credit.
That's some really good advice, because I can hear people thinking, oh, I could get a 0% credit card and lend that out to people, but that can be really dangerous, right?
It can be very dangerous because it depends on the term. However, the 0%, what they call the money transfer, where you actually have a balance transfer, that works great if you actually have debt. For someone to actually have debt, It's much better to have a 0% balance transfer for 18 months and have that to pay off the existing debt. And that's something I have done with a lot of customers when I was in banking. We're using that strategy because you're saving money out of the bag with the
Hmm.
0% interest. So do that for your own financing, not to lend money out to others. And the
Yeah.
reason for that is because when you're dealing with the borrowers, you never know. There'd be so unexpected um, consequences. What if you don't get paid back? Then you're stuck with that credit card payment and you don't want to do that.
Right. Well, and also when you are looking at lending, are you looking at lending to people who have assets to be able, you know what I mean? You're not just giving them a like a what we would call a signature loan or something like that. It's actually something that there's a tangible asset in case they don't pay you back, you would actually inherit or take over that asset.
Precisely. And that's something that I really want for the audience to understand. If you're lending money as a signature loan, that's really for your family and friends, especially if you lend money for your friends, you'll never see that money again. And you might lose that friendship. So that's
Right.
right there. So always looking for collateral. I'm an asset base, which means that I always want to collateralize any of my funds with a first lien position. So what does that mean is if something ever happened, I have the first right to receive the funds and I'm never in the second position. So that is something that's very important for the audience to understand. If you ever want to lend money, always be in the first position. That way you have the right to really be the first to collect any outstanding debt.
Yeah, very, very smart. So, what type of paperwork do you need to compile in order to do this type of lending? And kind of a second part of that is, do you typically hire an attorney that would draft that paperwork for you, or how do you come up with a loan agreement?
First of all, the way that I operate is really more of the gut feeling and the trust. Because you and I came from a lending side, we know the amount of document that is required from a financial services industry perspective. And granted, there's regulatory, there's auditor, they've got to make sure there's a paper trail, right? As a private lender, I look at things a little bit differently. I take a look at the person. Can I trust this person? First of all, I only do business if I like the person. If I don't have that right feeling, I'd rather not lend the money out. So that's number one. Number two, I take a look at this person's resources. Who is this person? Who can this person referred by? So I'm always looking for a referral. Someone refer me to this customer. It's not someone that came to me directly. So I have to check some of the references on this particular individual. Plus, I need to find out the proof of fund. Just because I lend the money to you, I have to hear from you. How are you going to pay me back? Because at the end of the day, it's all about when I'm going to see my money or where's my money? Like Jerry Maguire, where's my money? Right? So
Hmm.
that's what I'm looking at. So very simple qualification. Sometimes literally it's a really handshake. As someone I trust, I know, and this person can pay me back. We're all good. Now, on the back end of it, you always want to work with an attorney, and everything that I collateralize is always with the real estate, which means I have to engage a real estate attorney. And the document can be very simple. First of all, you always want to close in the attorney office or the title company. That's very important. You always want to use a third party. You never wire transfer the money directly to the borrower. So that is something for the audience. Make sure always use a third party to transact. So the funds. Now, so the attorney will draft what we call the promissory note. The promissory note is going to be backed by the deed of trust. Depending on the state, there are certain state is actually the mortgage. So everything is actually, first of all, you have to make sure by the attorney that the title is clear. Because without a clear title, it gets to be very muddy. So because I always want in the first position, so once it's clear, and my name or my company's name literally is going to be the first position. Once everything's done, that's where before I release my money, and this will be a little bit different that I've done compared to other lender, is I ask for my funds up front, my fees, because I don't charge interest rate. I charge fees. So, and the reason for that is I'm looking for the fund, meaning number one, this person had the resources, and number two, this person is willing to put skin in the game. And that's how I've asked it. So once the funds is received, then I release my portion of the fund as the loan.
And does your pricing change, or do you just have does it change based on the deal as far as what you're going to charge somebody?
Yes, it's very customized because the term, the amount, and also the purpose can be different. So it's really a customized to the point that the numbers gotta make sense. Because there are a lot of clients that they came aboard, and once I start analyze it, it does not make sense. So, and I'm not the kind of person that I rather have everything up front. And there are some other resources that might be more beneficial for the situation. And that's what I will recommend some of the borrowers. You know what? I might not be the right fit, but I know. And I'm also partnered with a resource where we all are pitching in for different deals. So if someone that I didn't feel comfortable personally, I will actually refer out to my business partner where we can pretty much actually have the deal done in a different way.
Okay, great. So I think that you've already told us a few of the dangers as far as lending money goes, and I'm also curious about, when you are lending money, like there's just so many things to think about, right? Including, say, underwriting the deal. Do you underwrite the deal per se? I mean, obviously you have to put the numbers together and make sure that they make sense for you. And if you're not charging an interest rate, but you are charging fees, then everything has to work correctly.
Absolutely. So first of all, when you take a look at property, you have to make sure there's enough equity in there. So whatever the amount that I'm lending, I'm literally over leveraged, meaning it's not just one property. Sometimes they actually require two separate properties just to get one deal done. So I'm really heavily leveraged, meaning that if something ever goes wrong with that deal, I've got multiple assets that I can foreclose on. So I'm still coming out ahead. So that's always rule number one. Make sure whatever you're lending out is not 100%. Make sure that you have some buffer. That's number one. And I'm sorry, there was another question that you were asking in terms of the danger.
Yeah, I was just asking about underwriting, if you do your own underwriting, or if, it sounds like you do.
Right.
Hmm.
That's it. That's what I do.
Okay. And then I was going to ask, which I think you were going to go into, was the three nuggets that you want our listeners to walk away with. How can they implement becoming a lender themselves, and be able to actually put this in action?
Well, first of all, I think if anyone that actually has their house has equity in there, I think that's the first thing they want to do is go ahead and establish a line of credit, not a loan, a line of credit. And the difference between the two is when you have a line of credit, in Texas especially, you don't get charged unless you use it and there's no fee. So it's literally you've got this huge credit card line of credit out there ready to be used. And so that is number one. Go ahead and establish a line of credit. That is going to save you tremendous amount of headache down the road because you already have that available. Second thing, always maximize your return by weighing and balance the risk and rewards. What I mean by that is if the amount is X amount, you've really had to ask yourself, is it better for me to just have this money parked somewhere else where I can earn a safer return? Or if I'm going to lend this out for X number of days, what exactly is my expected ROI? Can I double what I'm getting? Can I triple what I'm getting? So always think about the best scenario. And I'm not saying it's greed per se. I'm saying more of make your money work extra harder for you. And then this is not your money, by the way. This is actually the bank's money, right? Because you actually get a line of credit. But still, have the mentality, always maximize your return, double digit at a minimum. Third thing, always have something that backed by some kind of assets. Never lend anything out as an unsecure. That's a very danger. The last, not least, ask your fees up front because at the end you'll never get the fees back. Always have that up front, and that way you're covered.
Those are all really fantastic tips. And I keep having a burning question. So I'm guessing if I have a burning question, then other people will also. How do you make money when you're not charging interest?
Because you charge fees, and the fees can be very hefty.
Okay, so when you're talking about fees, you're talking about, like like an origination fee of some sort, and then, of course, late fees, and like, I guess for me as a lender, I think about a 1 or 2% origination fee, and then title fees that all go to the title company. Like, all of those fees are just kind of a wash. But when you're talking about actually, making money, and you said double digits, right? Your return has to be double digits. How do you make that so that you're getting that double digit return?
First of all, you calculate how long is my money going to be leaving my pocket, technically. So you start working backwards. So when you realize, so the contract that actually you drafted or promissory note, you put a very specific deadline when the funds, the principal is going to get back. Okay, let's say for example it's 4 weeks, right? Starting today and 4 weeks later, I'm expecting my principal to be paid back. Then you say, okay, it's going to be 4 weeks out. What exactly am I expecting every week that I can collect while my money is out? So that's when you start structuring. What is the percentage of the loan amount that I can charge? So I know is double digit, number one. Number two, I know that I'm going to get back. So if whatever reason the money is supposed to be back on the fourth week, it didn't happen, you got to make sure that you build the late fee structure in daily. In other words, $1,000 a day, let's say for example, that kind of put a pressure on the borrower because if something doesn't happen by that time, the borrower understand, oh my God, every single day the clock is clicking. So that's something that's very important. You have to make sure you build that. And again, you've got to make sure you have everything laid up front with a contract. So there's no surprises, right? So that's number one. And then also, if for whatever reason there's an extension, you're going to build in extension fees too. So whatever you need to think about that is going to cause your money not getting back, build everything up front in the promissory note so there's no surprises. And the last not least, of course, by a certain time, and again depends on the state, foreclose the property. So the property is yours to have.
Yeah, and I know that you had mentioned to me a while back that Texas, the foreclosure process is what, 30 days?
Is 20, you have to give a notice of 21 days. So it happens every second, excuse me, it happens the first week of every Tuesday. So literally every single month, the first Tuesday of every month is where the foreclosure takes place. And you have to give 21 days of notice before the foreclosure date. So for example, for this upcoming September, the second day of September, I think September the 5th. So the notice has to be given out on the 15th of August. So once the notice is sent out, guess what? If you don't get your money back, the whole property is going to be on foreclosure.
Wow. Yeah, that's very quick, because yesterday I went to a foreclosure class and learned that in Colorado the process can take up to a year.
Exactly.
And
And
it
that
can be postponed like every year, or every time it can be postponed, and it just takes forever.
And that's the reason why, for the audience that is thinking about having some kind of lending, check the state law. Because if it's judicial state, that might not be something that you want to get into, right? So Texas is a great place to be. It's a great place to be a lender, by the way, just for those of people
Yeah.
that want to be in this business.
It may not be a good place to do exercise in the middle of the day, but it is in the summer, I should say.
Absolutely.
All right. Well, Feng, do you have any other things that you can add, or any other things that you didn't say that you'd like to add?
I think everyone needs to really understand we're here on this earth as a journey. We don't know how long we're going to be on this earth, but I really want people to not stress with their finances. Whatever where they are, there's a reason, but really open the eyes and reach out for resources to take some of the burden. Because once you have that, you're going to have a much, much happier living. But the same token, never spend, never finance your lifestyle. So, in other words, if you can't afford something, try not have it. So, I always say, people, when I was in the banking world, that people are naked in front of me, and my customer get very offended. I said, you know what? I don't care what car you're driving, because once I pull your credit report, guess what? You don't own anything. Everybody owns you. So I want the audience to really walk away. Be the owner, own everything outright. But for business, leverage everybody else's money. So as a personal, own everything that is yours. Business, have other people help you to finance take to the next level.
Excellent, excellent words to end with. Well, thank you so much, Wenfang. I'm going to include your YouTube channel and your book link so that people can access that in the posting that I put up on YouTube. And that way, hopefully, we can get you connected with some more people.
Thank you so much, Renee. I'm
You're,
so honored and privileged to have you
you're
on.
very welcome. Thank you so much and have a great rest of your day.
Thank you.
All right.
Bye-bye.